Good morning, guys. Welcome to this Thursday, February 26th. A couple more days of February, then we're going to be trading in March next week. And yes, that is big news. Excuse me, I got a cold coming on here, so it's going to sound a little bit awkward. But we had this Nvidia earnings come out yesterday, and it's really good earnings. Everything looked really good. Market just a little reaction to the upside, and so then it pretty much been drifting back down again in the overnight. Right now they're like up $1 or something. So you kind of shake your head. Market is behaving like a little spoiled kid, you know. You get spectacular earnings, massive numbers and everything, and it's like just lukewarm reaction to it. It's pretty interesting. But that just tells you the expectations out there, and these are massive numbers. So it's very much alive. We also have some hyperscale, not hyperscale, the quantum stocks. You have IonQ. If you haven't paid attention to those, look for quantum stocks. Couple of names there, Quantum Q. No, so IonQ and D-Wave, two companies which are big in quantum computing. That's going to be the next big thing, breakthrough when it comes to computing power, because that really pops up that power amount. So, but anyway, so the Nvidia earnings, but I was going to say those stocks, the quantum stocks, the IonQ came up with great earnings as well. So yeah, that also falls into that AI trade. So the overall market, you have some quantum stocks doing well. Nvidia did well. There's no reason for a sell-off. I think we're either going to go sideways, or if you're going to see a stubborn kind of spoiled child kind of a market reaction, we may see some selling. You know, that may be the case. So far, the overnight is holding on pretty good. Here, I have the little pop from Nvidia earnings that pop up pretty good here, and then they're right back down again. And then market open, they ran it lower, and then traded slowly up. But I'm thinking that we have a good shot for the market to start trading to the upside. Overall, the news has been pretty darn good. So we had to take that, start looking at it from that perspective. I did mark up by F1. Look at that. Hopefully it didn't get too confusing. I did mark up my F1 here with the major areas I keep talking about, so I don't have to just move the mouse around. It's going to be a bit more obvious to see, I guess. I'll hone those in a little bit. But news this morning, we have jobless claims at 8:30. We get retail and wholesale inventories. Also at 8:30. What else? Kansas City Fed at 11 and the 7-year auction at 1. And that's about it. That's all we got. So to Friday, we get a PPI read. Chicago PMI construction. I see we have more stuff going on Friday. There's going to be more interesting stuff happening there in terms of news. But to get started this morning, we're going to be starting this from with a slight bias to the upside. I did mark up a couple of levels here on the bigger picture, and you can see this is the lower area we were trading in. That's the three-letter edge I keep talking about. I marked that little area up. It taken that out to back up to this attractor, which I also marked up a little bit. So here you have the little attractor area, and that's where they're trading right now. So they're right up here up to this attractor. I'm not going to worry about drawing in all these little mini areas. On the F1, I'm just looking for major points, like the attractor area up here at 6960, the upper area at the 7030s. This lower area, that for 3 to 6 letter edge change. So where you can change your direction from a capital flow perspective, that's kind of the level I'm drawing out on the F1. But I would start off range bound. I would keep a bias to the upside. I would look to buy weakness, 6950s, 6940s, 6930s for rotations up. If they trade below that 6930s, I think that's going to be the three-letter edge. If they trade below this area of support, I think we are right back down in this lower range again. So this is going to be a pretty critical day to see how the market digests the Nvidia earnings. So far, it was a light positive reaction, but there was no buying in the overnight. Then the gap really start taking off. It just kind of back to where we were trading yesterday. So, and they were good earnings. There was nothing bad with those earnings at all. So, you had to wonder how the market operates, but that's what we got to work with. So initially looking to buy against those 69.50, 40s, and 30s. Below 30s, that would be that ledge. We're going heading back into the slower range again. Always keep that your mind open for a one level below the obvious. That would be one level down here to the 69.20s. Could be a probe down there and then retracement from there, but just keep that in mind. So I would look to buy. I would change my bias below 68.30, but I would still look to buy against the 20s and the 10 and the 6900s here for rotations back up, just in case they overshoot, and it gets more violent than you thought. On the way higher, if they start taking out the 60s, we have a low volume area here right at 70s, right above this. So they can up here. So they had to kind of take it out with a little bit of conviction. So they trade above that 69, 75, and 85. I would look at its 75 area here. If that comes out, I would be more inclined to look for a move higher. So that would be your low volume area right there, right before that 60 at 69.70. So and you see it in the volume here, not in the TPOs, but in the volume. See that big little dip we have right there? That's your 69.70 low volume area. You see it on the histogram as well, pretty obvious. So that's what we got to look forward to. If they can clear that low volume area, we are going to be up in territory where we can test potentially that the highs and potentially take it higher. But we'll see. That's going to be very interesting to see if they can get this. If these earnings now is going to be able to move the market higher or not. So that's where we are. But initially, we're going to buy against these three levels of support below that 69.30, taking off the long bias, going back more range bound. Right. On the Nasdaq, Nasdaq reaction, as you can tell, was pretty good. I did mark up my Nasdaq F1 chart a little bit as well. And I was going to use a different color, but I got lazy and I just left it. So at that point, you can see a nice pop on the Nasdaq. They got all the way up here to this upper edge, but this is the edge we had to take out, right? This big edge we talked about, the 430 to 460, 470s. And if they can hold above this edge, we'll be in good shape. Right now, they just popped up there in the overnight. They traded right back down again. And now we are kind of holding in that range. We're holding above the 120. That's another ledge I marked up. So we're holding above that, but we're not quite clear that 440 to 470 area. So I would start off on the long side. I would look to buy weakness, the 340s, the 260s, 270s, down to that 190s, 140s, 190s. Below the the 260s here, there could be a nice short trade, a retracement trade, retracing the single print B print. I would look for that. I would look for a short trade there. So if you get more weakness below that 260, 270, it could be a short trade to see how far they can take it. That would be a valid one. It's going to be a little bit difficult to get on, I think, in terms of timing. The chances are it's going to be selling pretty good at the time if that is happening. But if you can, that would probably be a trade to look for, a short retracement trade. But I would still look to buy against the 180 to 9 or the 190s, the 150s down to the 100, 120s here. These three support areas, if they get that far down. That would be as reverse retest in this area. That's kind of what that would be. So you see I'm moving the mouse. This whole thing is exactly where that support area is. But if they take that out and trade back in this lower range, well, bets are off. Then we are just back range bound. So that's how we get started. If they start trading higher, looking for shorts against the 400s, the 460s or 450s, and the 500s. But I would look these first two ones, the 400s and the 450s, is more consistent with this area. If they trade up about 500s, I think they are pretty much cleared this area. It could be potentially a short up here as well. But so these three areas of support, you pay attention to those. That's where you have potential resistance you had to clear. But if they can get past those three levels, well, man, we'll be heading right up here to the 25 700s, and that would be a pretty good start of the pretty good end of the month, I think. And and we'll see if March can keep this going. So that's how we get started on the Nasdaq. So remember, Nasdaq is up against resistance here, and we need to clear that area before we can really get some traction to the upside. But we're in a good spot, and we had good earnings yesterday. We had good earnings on the quantum stocks come out, and so overall, we have a few tailwinds in the market now. Question is just if the market is going to be acting like a spoiled child or not. You never know. So that's how we get started. Finally, on the bonds, I rolled the bonds to the June expiration. Let me see if we can get over there. So bond market, where are you there? Now we're trading M26 on the bonds. We're going to be rolling the indices in 2 weeks. So not next week, but the week after that. So next week I'm adding new expirations in there, and then we'll see how that goes. But then right now the front month is still March, and 2 more weeks on the indices until we roll to the June expiration. So, but looking at the bonds right now, it's pretty interesting. we just kind of twisting in the wind still. Not much going on that guy at all. I drew up a couple of levels on my F1 too. As you can see, there's not much to draw. You have these outer edges. You have an attractor area in the middle. You have this upper edge. They're trading right there now. So if you can clear that edge there right at it, then we're in a good spot to potentially take this higher. But it's, chances are they're going to fail and trade back down again. And they've been doing this for quite a while. This goes back to May last year, this distribution, and it's just same old, doing the same stuff. All right, so that's where we are. You see, so I would just start off range bound on the bonds. Look to buy weakness against the 1714s, 1706s. We're going to sell strength against 22s, 28s up to the 1805s. Rotations back down again. So pretty straightforward action on this guy. This guy gapped down a bit because of the it didn't gap up. It just a split there. But it gapped down. This is your 25, yeah. It gapped down. So it wasn't a big move in prices based on between the March and the June expirations. And as I said, I look to buy against the 12s, the 6s, looking to sell strength against the 22s, 28s, and the 1804 to 5s here. And I will see. So pretty straightforward stuff in the bonds, not much to say about it. It is a pretty slow market, not much action there, but if you get good setups there, they usually work pretty good. All right, back to the ES and the Nasdaq, and nothing much has changed. So I'm going to wrap it there. Got a little bit of news here in 10 minutes or so, jobless claims, and we'll see what happens. And then it's going to be very interesting to see how the day session kicks in. All right, guys, we'll wrap it. Let's going to say good trading. And we'll see you guys back at 11:30 for the next update. All right, guys, later.